This is our Forex blog for February 9th, 2012. And like most days, we want to buy the super strong currencies versus the weakest and sell the weakest versus the strong. We have the dollar and the yen on the top, which most people trade against the bottom pairs. The histogram on the top is made up of our 5 best statistical trend tools we've developed over the last 6 years. 3 of them measure the direction that, in this case, the dollar is moving versus the rest, and 2 of them measure the intensity of the direction. We average it together and give you one easy-to-read indicator. Underneath that, we have the daily trend, weekly trend, and monthly trend statistics. So in case of the dollar and the yen, you can see they're both clearly weak. You want to trade these because they're weak on all time frames versus some of the stronger ones. I personally don't care much about the monthly trend. I want to find real-time trend. That's the most important. Daily trend second, and weekly is third. If the daily and weekly are down and the real time is down, clearly you want to sell the dollar. You're going to have some losing trades, but typically they're going to be small, 6 to 10 pips. Some of your wins will be small 3 to 5 pip wins, but you're also going to catch, if you take enough trades, some 20 to 100 pip moves, and that's going to make up for it. You can see the Australian, strong on all time frames, same as the New Zealand, same as the Euro, except the monthly trend's down. Again, I don't care about that much. If the real-time trend's up and is way over the 80 line, which we consider significant, then once about an hour, half an hour to hour of weakness, it's usually going to return. And then you can see here, weakness followed by very little strength. That weakness is very likely to continue. If you see a pattern with extreme strength or weakness followed by the counter trend move, 1/3, 1/2, or 1/4 of what the previous momentum move, usually that momentum continues. So you can, to some extent, ignore the daily, weekly, monthly, but at some point, if the weekly and monthly trend are very strong, the weakness is going to revert back to some strength, so just be aware of it. So basically today you want to buy the Australian dollar, buy the Australian yen, look for buys in the New Zealand dollar, New Zealand yen, and Euro dollar, Euro yen. So let's start with the Australian dollar. Starting the day off, and one thing to keep in mind on any given chart, notice the weekly monthly trend's up. And so when you get this kind of slightly lower low, mini double bottom right here at our lower containment band, usually the lower containment band contains price. This is one of our best tools. It's statistically based. It looks back over the last 20 days and finds the most extreme volatility, and it plots those bands around the hourly moving average. You can set them up using 15-minute moving averages in the middle or 30-minute, but I find that it finds enough good trades, and you can usually rely on it using the hourly. So the fact that it came down near double bottom, good place to look for buys, especially since the weekly trend was up. And you can see it went underneath the previous day's low. When it came back above there and then broke out right here, you have some nice upside potential here. Here's your first profit target, the previous week's high and the hourly moving average. If it gets above there, the next major resistance area is right here. So there was a nice trade here, the little breakout here, the pullback trade to the hourly, which is a really good trade. You can see it went up about 20 pips. And once it fails to get above that level, personally myself, I would ignore this the rest of the day until it breaks above the monthly R1 pivot level. But once it breaks above there, then this is your next likely maximum profit target. So there's not a lot of upside once you got some of these earlier trades. First trade, maybe this breakout right here, the pullback to the hourly, and you might have even bought the second one. But once it failed to go back up to where the high is, I would personally have ignored it the rest of the day. Here's the Australian yen. Same thing. This one was, notice how it came right down to the lower containment band, found support. Very strong weekly, monthly trend. This is a pattern that you will find frequently. And anytime a currency is very strong, weekly, monthly trend, when it comes back up to the hourly and goes sideways and does not, usually when a currency is underneath the hourly, comes up to it, it finds resistance and it goes back down. Usually it tries to go and test the lows. When it comes up here and just goes sideways in a nice little rectangle pattern like this, very high probability trade. You always want to draw your fibs on the last wave to get an idea of where to get out. And myself, this went up with a lot of strength. I would have probably got out of half at the first fib target and then got out of this one here. That was only about a 10 pip move. One of the reasons of having the containment bands is it's riskier and low odds to buy up above the upper containment band, especially the white one. So, one of our trades is an Elliott two-wave fib pullback, and also, like I said, when currencies go from underneath above the hourly, when they come back and touch the hourly, it's a pretty high probability trade. There's 2 entry methods right here. the hourly moving average pullback system, and the Elliott two-wave pullback system as well. And the fact that it found support at the hourly and went sideways for half an hour, when it breaks above here, you want to go long at 25. And notice our intelligent trailing stop didn't get you out until right here. Very nice 30 pip win right there. Let's look at the New Zealand dollar. This one again found support at the lower containment bands, which you're going to find happens a very high percentage of the time when the weekly monthly trend is up. This one also kind of has a 1, 2, 3 low right here. When a currency's found the bottom and has gone up, if it pulls back 50 to 62% but doesn't go underneath the 62% retracement, that's how I mathematically classify what I consider a 1, 2, 3 reversal signal. Usually the hourly moving average could be your profit target. When this breaks out of this nice little wedge pattern as well, you can see the trailing stop got you out almost all the way up here at the high. And notice what also happens. It comes down to the hourly, finds support, and tries to go back up again. Once it fails to really make a significantly higher high, and we do have the previous week's high right up here as well, if it's underneath there, this is a major resistance area. So until it breaks above there, you don't really want to spend too much time buying this. You might have bought this little pullback here, but it's less likely to work because it did not find support at the hourly. It actually broke underneath it. There's a New Zealand yen. Again, this one came up to the hourly, had a nice little, hour and a half, 2 hour rectangle pattern. Basically just look at a very low volatility 15 to 25 pip rectangle for, I'd say, hour and a half to 3 hours. The longer the better. Broke out and it went right to the upper containment band. Notice none of these today went outside of the white containment band. So that's, again, one of our better tools, and it's a great profit target. When you're coming up to this level, don't be greedy. One day out of each week, typically you can see currencies move 10 to 30 pips above this band, and sometimes when extreme news happens, you can have 100 pip moves above this, but it's very rare. And again, it's based on maximum past statistical volatility over the last 20 days. So it's a great place to really consider taking your profit target. If you're up above the red band and it doesn't have plus 80 strength, it's going to reverse. And the same thing with the white band. If it's up here and you go underneath the 80 level, like right here, it's very likely to reverse, as you can see it happen. Let's take a look at the euro dollar. This one also was very strong today, and the same exact pattern happened. It came up to the hourly and it kind of went sideways. You have a nice little rectangle pattern. It's got about a 15 pip volatility during this 2 hour phase, and then it broke out. And again, look where it stopped, right at the upper band. One of the last trades I see on this is the fact that it has a daily, weekly, monthly trend that's up. When this hit the upper bands, it made a two-wave pullback, which also happened to be right at a Fibonacci retracement level, which is a major area of major support. You can see it was the same low pretty much yesterday and also today. The fact that it also was an Elliott two-way pullback added to this probability, and you can see it went up 70 pips from there. And it's usually easier to use our range charts to find these high odds trades. When this made a pullback right here on the you can see it kind of made a low, rallied up, kind of went sideways right here. You can see the weakness, statistical weakness was pretty much gone, and then it exploded up.